All right, guys, I think people in crypto are about to get wrecked. And in this video, I want to explain why. And there's not going to be any big intro, no jokes, no sunglasses, because this is a serious video. Because what I'm seeing in crypto Twitter, in the crypto space in general right now, it's silly sausage level, all right? It's goof troop. I don't get it. And I want to make this video very quickly so people clearly understand what is going on in the markets, because it's not complicated. This isn't some pseudoscience. I don't have some crazy chart that's multiplied by the levels of pi to explain what's going to happen in the market. It's really clear what's most likely to happen right here. And I want to show you that, because if you understand that, you can likely buy around the bottom here and make a lot of money in the future. You can also avoid losing all your money here and being stressed for the next year and being angry at everyone and picking up a smoking habit. Let's not do that. And so if you give me a few minutes, I'm going to explain why the bottom probably isn't in here and why everybody talking about the bottom, they're ignoring a huge key piece to all of this, which is just sitting there. It's like an elephant with a giant erection in the corner of a room saying hello, and people are like, oh, this room seems completely normal. No, there's an elephant with a giant boner in the room, and it's doing inappropriate things now even, and you're still ignoring it. Let's talk about the elephant. And look, the data and what I'm going to show you in this video is what I've used to time the top of the market in gaming crypto, which is what I was primarily invested in. We all exited then, made a ton of money. And I've used this to time the bottoms and the tops of this entire bear rally. If you go look at my videos and my tweets on Twitter, I've nailed it. You should be following me at ZSS Becker on Twitter. That's where you're going to see what I'm doing much earlier. Now, how have I done that? First off, gentlemen, luck. I'm not the world's greatest trader, and I'm probably going to eat a ton of crap here pretty soon with some call. That's just how it is. I'm not expecting to hit Jim Cramer levels of wrong, but let's calm it down here for a second. I've had some good lucky calls here recently. Now, how have I done that? What's the data I've been using? I don't use some complicated TEA or Harry Potter magic. I look at what's most likely about to happen based on the macro markets, because they're clear as day. All of crypto is ignoring the macro markets. They did it at the top and they got blindsided. Now they're doing it again. I would like you to not get rammed by the elephant in the room. Without further ado, let me explain this to you. Just give me 5 minutes and then you can go do whatever the hell you want in the market. But just factor this into your thinking. Just take it a little bit, tiny bit. Before you YOLO grandma's life savings at Thanksgiving. Before you go to Thanksgiving, like, the bottom's in, everyone. Lose all your family's money again, like last year. Let's put a pin in it. Listen. All right, guys, let's talk about this. And again, if you want spur of the moment, like insights on this, follow me on Twitter at ZSS Becker, because I can only make like one of these videos a week. I'm the CEO of an ad tech company. That's where most of my time goes. Okay. And so here's, again, what I'm looking at and the data I'm looking at to actually be consistently pretty damn right about the markets. Here's my little radar. Here's the warnings, because it's really simple. I'm not doing complicated TA. I'm not going to give you some science charts or anything like that, like every other channel. I'm just going to basically break this down because it's not that hard. So look, here's where we are with the markets. I'm sure everyone's aware we capped out at 64, 65,000, and we're down to $15,000 right now. Now, by every single data point, if you are looking at just crypto, if you're looking at just sentiment in crypto, you're looking at what's happening in crypto with FTX, and all the things that are liquidating, all the things that can continue to keep liquidating, Voyager, Luna, all the things that have happened. And you look at everybody talking on Twitter, everything in crypto, all the charts, all the buy metrics, everything indicates that we are at the bottom of crypto. Everything does, okay? And you also have to realize at the top, everything at the top did not indicate that we were at the top. I'll explain why in a second. There's a lot of things going on Twitter and people's behavior and the buying and selling of things, but it mostly did not indicate we were at the top of the market either, if we're just looking at crypto. That's what's so damn dangerous about right now, because if I was looking at just crypto right now and I was looking at the price action, I was looking at the liquidity and everything going on, I don't see what more can really get worse in this space. We could have a few more liquidations, but literally we're seeing major things get liquidated. And nothing really bad is happening to the price. We saw a giant lender, Genesis, go under, and we've only gone down 3%. This would have tanked the market in the past. Elon Musk tweeting something would tank the market like 15, 20% in the past. You need to realize that there's really no bad news. Like, people are like done selling at this point. It's going to take some serious stuff like Tether collapsing or Binance going under or something like that to really send this market much lower. Now, Tether could collapse. That's a whole entire other video, and I could possibly see it happening in the next year or so if what I'm about to show you in this video does happen, and I think it will. Here's why. So look, again, like I just say in the crypto market, everything looks like it's bottom. I would be buying this up if not for the data that I'm about to show you right here. And we could very much be wrong here. I'm totally open to being wrong. I'm not attached to this. I'm just telling you what's most likely about to happen. And I do have a plan of attack if I am wrong. They will make us a ton of money, which I will tell you at the end of this video. Okay? But here's what you need to understand. What is most likely to happen? What is most likely to happen? And what's the most relevant thing to pay attention to right here? Here's why everyone in crypto always gets wrecked, or at least this last bull market to bear market. Here's why everyone got wrecked. So here's all the normal financial markets in the world. Okay, so picture like a giant skyscraper. Let me make sure you guys can see this. All right, so picture like a giant skyscraper. All right, so we got real estate, we got the debt markets, we got bonds, we got equities, S&P 500, all that stuff. We got this is the giant market. And then in the basement down here, okay, we take a few stairs down, in a little tiny dumpster area, we have crypto right here. Okay, and so we're down here in this casino that's in the basement. We're gambling away. We're having the time of our lives down here. Okay, and if you just pay attention to what's going on in this room, well, right now, if you're paying attention to what's going on in this room right now, it looks like crypto's at the bottom. But what people don't understand is that crypto still exists in this giant building of general finance. And so you have everything up here. And when this goes down and crunches it, it smashes in the crypto. Crypto is just a floor in a building of entire finance. And what people are not doing is they're not looking at all of finance. And there's terrible things going on here. And so we're down here thinking, oh, it's the bottom, it's the bottom. In this room, yes, it is the bottom. But if this building comes down, our little basement gambling thing is going to go 10 times lower. Okay, it's going to go much lower. I don't think we're going to go 10 times. I'm not trying to call a price bottom here. I'm trying to call a point when we should be looking at crypto. So please understand. I'm not saying, oh, we're going to 5K or 8K. I don't know, dude. I don't know. I'm trying to tell you when I'm going to be looking at it. And so what is most likely to happen is this building is about to come down. Okay? And so while we're in the bottom of crypto by all metrics, that does not matter because we are not in a crypto bear market right now, primarily. We are in a macro bear market. At every single time in history, what's been going on is when crypto hit its bottoms, this market was doing fine. This skyscraper was just fine. When we saw our old bottoms and everything going on, everything else in the economy was just fine. So people that own Bitcoin or large whales that own Bitcoin, even though their Bitcoin investments were crashing, even though their crypto investments were crashing, all their other investments were fine, so they could still hold. Now imagine all these, their main investments, which make up 90% of their portfolio, those crash. What do you think they're going to do with their crypto? They've never been in this position before. And by all intents and purposes, this building is doing very, very well. Okay, and the main reason why people in crypto get wrecked is they don't pay attention to what's happening in this building. But when the plumbing goes out here, when the lights go out, when something explodes down here, it smashes down in this dumpster down here. Also, I have to address this very quickly. All right, so you guys have probably seen you can't go 5 feet on Twitter without seeing this damn image of buy points. And so this is a chart that basically over time shows you when you should be buying Bitcoin. Okay, and so you can see it's been pretty damn accurate. As we get into the blue, you should be buying. Currently, this is an old chart. We're way down here somewhere right now, but that's not the point of what I'm trying to make right here. Every single one of these data points, every single one of them was taken from 2008, aka the biggest macro bull market almost in the history of the United States, maybe the biggest one in the United States since before the Great Depression crash. There has never been a time in this entire chart right here where we were in a bad macro trend. I'm talking massive rate hikes, no money printing. Money was being printed this entire time. Okay, the number one thing that boosts the markets the entire time. We weren't seeing real estate crashes. We weren't seeing consumer credit hitting all-time highs. We weren't seeing layoffs. We weren't seeing people getting laid off into massive credit debt, into inescapably high house prices, and their stocks and their 401ks crashing all the time. We never had a single of that in any of this. And so this is a good chart to analyze how people behave when everything else in their lives is going fine. When institutions, big investors, when every other investment they have is going great, up only. This is not an indicator of how people will behave in a true bear market of macro proportions in the macro markets. It's stupid to use this. It's idiotic. It is the dumbest thing I've ever seen. It is like measuring a guy running a 40-meter dash. You take his 40-meter dash time. Then you have him come back. You put a 200-pound sack on him. And then you go and let him run. And he runs much slower, obviously. And you go, why is he running slower? It's because you are using data from when the market was absolutely perfect outside of crypto to now when the market is about to nuke, in my opinion, outside of crypto and come down on top of crypto. And people's behavior is going to be way different here when they're in massive credit debt, they can't afford their house, their 401ks are crashing, and this applies to all the funds and institutions that are also holding their money and investing all their money. It's stupid to use these charts. Do not use historic readings from the best market in history where unlimited money printing is going on to compare in the worst market ever when there's no money printing going on and we're raising hikes to the moon and everything's unaffordable and everyone's going broke and bankrupt at record levels of credit debt. It's silly. Hopefully I've made my point. And what you need to understand is what happened when Bitcoin collapsed right here. This wasn't because of a crypto bear market. It's because people ignored one very simple thing. Around November, inflation was sky high. Rates were likely to come on. What happens when rates come on or start being hiked? The S&P, normal businesses, normal finance crashes. I'll explain that here in a second a little bit more. What's happening right now is that all of crypto out here was just focused on crypto. They weren't focused on the obvious writing on the wall that rate hikes were about to begin, and they held and got absolutely wiped out. Now, what's happening right here again is we're sitting here saying this is the bottom. This looks like the bottom. It does look like the bottom. It really, really, really does. I really wish it was the bottom. We're ignoring what's probably about to happen in the economy. It's basic black and white crap. And what's probably about to happen is this tower, while we're at a bottom right now, let's say our bottom's 15K, this tower's about to come down and knock it down much lower, in my opinion. If it doesn't, great. Okay, so for example, I own a pretty large ad tracking company. I don't want a recession to happen. That's primarily where my wealth has came from. So by all means, I'm rooting to be wrong here. I would prefer a nice soft landing. We don't go into a recession and everybody keeps spending tons of money on ads and marketing and stuff like that. Okay, it's great. All right, and that's what's been going on last year, but here's what's about to happen, and it's very simple. So if you go and look at when rate hikes end, here's a chart of when rate hikes end. More consistently than not, when the Fed pivots and stops increasing rate hikes, that's when the market really crashes. Why does that happen? Because as rate hikes increase, the rate hikes don't crash the market. It's not like hikes alone crash the market. It's the outcome of the hikes and the impact of them when they start to happen. The impact of it doesn't happen right away. What happens is the hikes increase, businesses start laying off people start spending less money, the earnings of stocks and businesses go way down, then stocks go way down. People stop buying houses and have less money to spend and are laid off. They stop buying houses, the real estate market goes down. Okay, and it's just a cascade of effects like that. I'm not going to go into all the cascading effects because you don't need to understand that. What you need to understand is that's what's going to happen. And that's what we're seeing right now. People are getting laid off into, and I post all this on Twitter, a massive credit card and personal debt crisis as fiat currencies are weaker than ever. And there's a whole other mess of things that can break. So what does this mean? People are getting laid off. Layoffs are occurring a whole lot. Hikes are hitting their peak rate hikes where they're probably going to start pivoting. People are going to stop spending. The earnings on stocks are probably going to be pretty bad. Real estate is probably going to really crash as people stop buying these crazy prices. Normal people can't afford houses right now at all. It's like not reasonable. You have to make $120,000 a year or something to even like be able to apply for the median range of a house. It's not working. Everything has to come way down. And so looking at past history, plus all the terrible things that are going on right now, what is most likely about to happen? What's most likely about to happen? The market in equities and normal finance is probably about to crash. It's probably about to go way down, maybe 3,200 or something, S&P. And that's just looking at the usual case. Usually there's a big old dip. There's a big old dip after they stop hiking. Okay, there's a bit of a dip as people predicted to come. That's where we're in right now. And we haven't even seen the pivot yet. These are the pivots. They pivot when stuff starts breaking. Now, the world right now is completely messed up banking and fiat wise. I don't know the depth of it because I'm not the world's greatest financial expert. Okay, there's plenty of channels out there where they'll pull out a million charts and stats and lecture you for an hour in economics. I don't get it. I'm just like you. All I know is there's a lot of shit that's happened the last 10 years. We are in a 10-year period of pure money printing and leverage, and I'm willing to bet the stuff that was going on in FTX and we've seen in crypto probably has been going on in general finance. I think something is going to break when we see this big dip right here. So again, this will be an even bigger whammy. We could see like a 2008-like crash. We could. So what is most likely to happen here? What is the obvious duh if we can point out anything? At the top of the damn market, the most likely thing that's going to happen is they're going to turn on rate hikes. If you had any knowledge of the macro market, you just get out there. Why would you go into the skyrocketing market with rate hikes going on? Now, what's most likely to happen right here? We're going to see this at least pivot dip. in equities. When equities go down, this is the price of Bitcoin when equities and the other markets are doing like kind of okay. The general markets are okay right now. If you look at the S&P 500, here's where we peaked out at. We really haven't gone down that much. Now, if we look at the M2 money supply, there is a lot of money on the sideline. Everything is going to rocket when we do hit a bottom here. Like, it's going to go back to all-time highs. Things are going to be nuts in crypto and everything. We're not talking about that right now. Equities are probably going to go a lot lower. And when equities go a lot lower, you can see here's the top of equities. You can see right here, here's the top of equities, all right? It topped out about 4,700. This times perfectly with Bitcoin's crash and rate hikes and everything that came on, okay? So don't act like equities aren't Bitcoin is basically tied to equities, okay? It's living in the building of general finance. So what's most likely to happen here is that if we're at 15,000 with the markets doing well, if the markets are doing terrible, like bad, blood in the water in general finance, we're probably going a lot lower. So, what should we do in this situation? It is quite easy. Wait for the Fed to pivot. Markets will likely crash. If we're lucky, something will break and markets will really crash. Long story short, wait till the markets crash. Wait till general finance gets in a crash situation and the Fed has started to pivot. Okay, and if we look at general markets in the past, Fed pivots, we see these big dips right here. And if you buy any time during these periods right here, you're pretty much good. These aren't high risk buys right here. I'm going to reason if you buy top cryptos in this period too, you're pretty much good. We're not in this period yet. So just don't buy anything. That's it. And if we do see a soft landing, we roll into altcoins. We roll into microcaps. We do the same thing we've been doing for 2 years. We trade the smaller coins that are rocking up and down. And if we see a huge bull run, which I do think is a possibility right here, there is a slight possibility we could just go back to normal, massive bull run, all the money that's sitting on the sidelines, which is a ton, more than like ever before, rolls into markets. We see a massive bull run, we skip this, and then we see a real crash in the future. That could happen. What do we do then? We trade altcoins. That's it. That's all we gotta do. They're so damn low right now. We could just trade boring altcoins and still catch 5, 10Xs left and right. It's going to be just fine if we're wrong here. However, I do not want to go and sit in this market right now and have a hellacious year in these assets. Why? What is the point? The macro is absolutely terrible. And crypto has just been the first thing that crashed because it was such a house of cards. FTX, all these exchanges, it was all nonsense. What was going on in this? I don't think crypto's tech is dead, by the way, but that's a whole other video. But everything that's going on is nonsense. The nonsense got exposed because we were that out of our element. We were that over leveraged in crypto. The rest of the world is holding up okay right now. It's about to not be. As people fall into all the layoffs that are going on right now, and the lower earnings, and the debt right here, people are going to stop spending. Like, people are about to, they're going to have an option. Be bankrupt or start paying their debt. People are not going, they can't afford their mortgages, all their debt and everything going right now. The consumer spending is about to plummet, in my opinion. I think earnings are about to be super bad. And this is going to drive stocks super low, and we're starting to see everything else come back down. And so that's what I'm thinking right now, guys. In the next video, I'll probably talk about like a bunch of coins I'm looking at when we do bottom. But I just wanted to make this video very quickly because what I'm seeing on Twitter, it's alarming to me because I keep seeing people talking about crypto in a bubble. They're saying, well, crypto looks like it's a bottom. It does look like it's in a bottom. Everything looks like a bottom. Every chart, sentiment, behavior that's going on in the space, everything liquidating, it looks just like the 2015, 17, 18 bottoms. But you have to factor in those bottoms were in massive bull runs in the macro market. There was no macro market exploding on top of crypto at those times. It went down in its own bubble. Right now, we're in a terrible macro market. So we can't go and look at crypto in a bubble and say, hey, look, it looks like it's bottom when we have this giant skyscraper about to come out on top of us. That's the point. And if you don't factor in macro markets into your thinking about crypto, you're an insane person. And I don't want you to be an insane person. I prefer if you don't get wrecked and maybe you could just go and get drunk for the next year instead of investing in crypto. Maybe that's what you should do instead. All right. So that's all. If you want to see insights as I'm thinking, you want to see things a lot sooner, follow me on Twitter at CSS Becker. Have a good Thanksgiving and stuff.